I got good news, bad news, and there's one thing that I believe Tesla needs to do to prevent any more bad news. And we are not talking about Tesla stock buyback. Seems quite likely. I'll make another video about that later. It might be if China's economy continues to keep falling, it's probably a good idea for Tesla to work on that $25,000 or $30,000 car and launch that as soon as possible, ideally as quickly as Tesla launched Model Y. We do have some very good news for Chinese economy, and this is where the demand comes from. If the economy does well in China, orders will continue coming in. But if China's economy does not do well, then Tesla might need to cut prices again in China. Troy thinks it is more likely now that Tesla will cut prices in China. The price differences of Tesla vehicles in US versus China is huge. Troy estimates that Tesla's gross automotive margins for every vehicle sold in US is almost 40%. But for Chinese sold vehicles, this is before the price cut, it was just about 20%. And now with the price cut, that's just a little over 10% gross auto margins in China. And the main reason for that is not the labor cost or the margins or anything like that. People in China usually buy the cheapest model, while people in the US and Canada, they often buy the more expensive models. Production is no problem at all for Tesla. I see that is going to be at about 50%, but deliveries that's a big question. And it all depends on China sales, at least if we follow Troy here. Tesla is giving us a 50% production guideline, while as for deliveries, Tesla says just under 50%. I would assume, let's say that's 47%. You can choose a different number if you would like. Wall Street is at about 430,000, but Troy is closer to these numbers right here. That is, if Tesla does not cut prices further in China. Gary Black thinks that another price cut would not be viewed positively by Wall Street, therefore this short term could affect Tesla stock price negatively. Now, there are a few things to really think through, which will show us what is actual Tesla's long-term strategy here. So we know that there were 16,000 units that were produced but neither delivered nor exported in October. This is from Giga Shanghai. If we use Troy's assumptions that Europe enjoys about 20% gross automotive margins, and knowing that Tesla has quite a big backlog of orders in Europe, and if you make more money from those cars, it would make more sense to perhaps sell those cars to Europe. One way that we can know that Tesla was expecting more orders from the recent price cut than what we actually had was that now it is too late to book a ship to export the cars that are in inventory, that 16,000 extra vehicles. You have to also remember this is the holiday season. In one of my businesses where we ship from China around this time of the year, near Christmas, it's a lot more difficult. You have to sort of plan things around, in advance a little bit more. So if how Tesla exporting those 16,000 cars to Europe, those cars will arrive in Europe in January. So that would mean deliveries for Q4 would not be as high, and Wall Street would be disappointed because they only look at deliveries. However, maybe there is something that we do not know. Maybe Tesla recently found some ways to cut costs in China, and maybe selling to China, even if we cut prices further, maybe that still makes a lot of sense. However, if those margins do not improve recently and Tesla cuts prices again and focuses on deliveries within China, then a possible conclusion to make from all of this would be that Tesla is much more focused on short-term deliveries and keeping the stock price higher instead of shipping those vehicles to Europe but having them delivered in Q1 of next year, which would, if selling to Europe gives you more profits, why wouldn't you do that unless you are concerned with the short-term stock price? If Tesla does not cut prices further, maybe they are just hoping that there will be a huge rush of orders in China because of the subsidy that is ending later this year, hoping that most people will be rushing in to use the subsidy last minute, and maybe that's why they are increasing their inventory and not exporting the cars to Europe. In Australia, there is quite a backlog of orders, so maybe Tesla could ship those cars, or maybe they were made for Australia. I don't think so, though, because people drive on the other side in Australia than they do in most of the rest of the world. So if you made those cars for a market that drives on one side, you can't sell those to the other markets that drive on the other side. Yesterday, Elon Musk appeared in an interview at a conference from Indonesia. He called in, and he was asked about the cheaper car, and he did say, to paraphrase him, that it makes a lot of sense to develop a cheaper car. And right now for Tesla, I believe it is very important to focus on making that car unless China is no longer in trouble economically. Then I believe demand would come back very strongly for even Model 3 and Model Y without having to introduce this new car. So this news looks quite promising for China's economy, but if things don't look better for China's economy, and if there are restrictions again and lockdowns, which now cases are going up, by the way, and restrictions are still easing. So this looks good, but if this stops and economy suffers again, I would expect there to be basically no backlog for Tesla vehicles in China for the time being, unless Tesla drops the prices even further. But if China's economy does well, I think the backlog would come back strongly. So Tesla, I believe, should really focus on getting that cheap car out as fast as possible to prevent any kind of uncertainty during this potential recession. And generally, long term, I see no issues at all. This is just all short-term noise. So if you are a long-term Tesla stock investor, what I would basically do is I would just brace myself for what's potential bad news, and then the bears start talking, I would just dismiss those. But it's important to know everything that is going on. Now, I would like to show this to you. Remember the Q2 Shanghai situation that stopped all of the production? Well, Troy estimates that if it was not shut down, then we would have 70,000 more vehicles either produced or delivered. That would put us safely, probably roughly within the 50% range for deliveries and well over 50% for production. What I'm saying is that the future looks good. We do know that, at least Elon said, that Tesla will not export vehicles from China to US, And usually what Tesla does, if one market is low, they allocate supply to another market. So perhaps we should expect more exports from China then, but probably to Europe. Now, one more thing that does not fully add up is the global shipping containers are cheaper. Basically, shipping is much cheaper from China to Europe and everywhere where Tesla exports cars. So when you think about that, did Tesla really cut their costs so much down in China, which is also offsetting this reduction in shipping costs, that it makes more sense to sell those vehicles within China at a lower profit than it makes sense to sell those cars to outside of China at a higher profit? That's something to think about. Something here does not completely add up just yet, and we will soon have more data coming from China, and maybe that will change everything. Right now, a lot of this is just speculation, and something just clearly does not add up. As a long-term investor, none of this worries me at all, but it is fun to see what is going on and figure out, why is Tesla doing this? What is Tesla not telling us? What are we missing? It looks like something is not fitting together. Either way, I am a conservative investor, so I would prefer Tesla to really focus on that cheaper car. Maybe it doesn't need to be launched until we know for sure, hey, look, Tesla's demand is weakening within China and economy is in recession. Just be able to launch it very quickly, because if China's economy remains very strong and if it turns around, then we don't need a cheaper model for the foreseeable future. But if there is a bad recession, then we need that cheaper model rather soon, unless China can just export vehicles easily to other places in the world, which for some reason they didn't do that with that 16,000 car batch. I'll be looking out for the latest news, and I'll be watching very carefully what Troy is going to be reporting over the next 24 hours. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Hostess, reporting to you from Vancouver City, Canada. I'll see you in the next video. Thank you so much for watching. Make sure to like and subscribe if you haven't yet.